Jonathan Barratt is Managing Director of Commodity Broking Services, and he joins us now from Sydney. Thanks so much for joining us, Jonathan. First up, give us an overview of what you're seeing out there.
Rishaad, the overview, I think, is that some commodities are still cheap and looking high, particularly in the grains. The precious metal markets sort of consolidating and perhaps lower. The base metal markets consolidating, and oil or the energy sector looking quite well bid.
Right, so when you say consolidating, does that mean that we're in a pattern right now where we're bottoming out and we can be set for another stage in the super cycle, as some call it?
Yeah, I think when you look at particularly some of the base metals, you know, copper, zinc and nickel, they all look as though they are consolidating at the moment. And it actually feels as if they're looking ready to set to move higher. But we just haven't seen the follow-through that we'd expect in certain levels, particularly with the BDI, to suggest that we can see that lift occur. But they're just waiting, consolidating, and we probably expect that given the next week or two, when we get a little bit more of a clearer signal as to what's happening in China, that we'll find that these base metals will in fact start to move higher. But at the moment, they're just sitting there, just consolidating.
Jonathan, when you mean BDI, you're talking about the Baltic Dry Index. It tells us how much shipping is going on, basically, doesn't it? And that gives us an idea of the trade patterns.
You got it 100%, and that's actually been, it's an index now which has been under pressure probably for the last month, so it is quite a concern because that is going to affect our ability to actually recover, because if primary imports aren't being used, freight rates are going down, then that sends a bit of a signal to us that we're still waiting for the last tail of this recovery to really unfold.
Right, I want to talk to you now about oil. We are in a range here. I mean, we've been between $70 and $80 a barrel for, I think, months now. Yeah. What's going to actually make us get off that? What's going to be the trigger?
Look, it's going to be very hard. It's actually quite hard at the moment because we have been stuck in that range for some time. One of the things which are occurring at the moment is we've just got that supply demand. We've got hurricane. We've got peak demand at the moment, particularly in the States. Hurricane Alex causing supply to drop off from the Gulf by about 26%. If the hurricane season continues to pick up, then we could see it actually break through that US 80. And if we see those reports which we had from the IMF, which are indicating very strong economic growth, particularly out of Asia, then that could give us that impetus to actually move through US 80. But at the moment, I think we're still trying to, at the mid-range, but looking to test that US 80. As to when we break through it, I think we need to see more economic data that suggests the recovery is really firing.
Jonathan, very quickly, we've seen the fear indices actually improve, showing that perhaps people are not that averse of risk as they were a few weeks ago. Very quickly, as gold shot its bolt as a result of that?
Gold's going to be really interesting, basically because we're trading at support levels around 1185, 1180, which represents the lower end of the trend from when gold was at US 700 an ounce. If it breaks it, we're going to consolidate for a lot longer. If we hold, we'll probably head back up to 1220, 1230. So it is at the moment the lower end of the range. I'd like to see it test a little bit more before it pushes higher.
Jonathan, pleasure having you on the program. Jonathan Barratt there joining us. He's from Commodity Broking Services. He was joining us there from Sydney. And